Okay, welcome everybody. Thank you for joining today. I'll be your host. I'm Giuseppe Basile, also known as the FibStalker. Welcome to the FS Street Weekly Show. Today is November the 2nd, 2016, and I'm enjoying the comments from Nicholas. Thanks, Nicholas, for sharing. I had 10-day, a wonderful trading, 10 days of wonderful trading. So I'm very happy. And I'm glad that what we do here and in other shows and courses is helping. You're very welcome. Thank you very much. So today it's pretty packed. I'm going to spend a little bit of time on fire and forget, whether that's plausible and useful in forex trading as well as trading other instruments. I'll talk a little bit about U.S. elections. I will not be a talking head. I'm not trying to predict or rationalize what's going to happen. I'll just present the charts and talk a little bit about the two scenarios. I'll then review the past analysis. I identified 4 opportunities last week. We're going to review those, and then I will do one section dedicated to the review of some of the euro pairs, the most traded ones, and then I'll do the same for the pound. And I'll just need a minute here. Bear with me. Okay, thanks for your patience, and then we're going to talk about some new trading ideas. So thanks for joining. As you know, risk is trader's job number 1. It's very important, and it's important to mind the risk at all times. If you do that, basically your trades will take care of themselves. I won't talk about myself. You know me from the work here on FX Street. I want to just mention the fact that I'll be starting and launching shortly my FibStalker Winning with Algos community. So stay tuned, and if you want, you can subscribe to the newsletter on the on one of my websites here, www.fibstalker.com. Okay, so as today is very busy, I'd like to talk a little bit about fire and forget in trading. That's something that many people, or some people actually, talk about often. Some people even base their strategy on firing, so taking a trade and then forgetting. I want to give you a little bit of perspective on this. I don't believe that's generally possible for any trade, and I'm switching here on the chart because I want to show you some examples. Actually, I will work only on examples on this in this section. And I want to take the example of the euro dollar. The reason I'm getting the euro dollar here, I'm using the euro dollar, is because it was one of the recommendations we had last week. And if you remember, the analysis that we did last week was actually very simple. We had a 50% retrace that eventually started finding participation at the beginning of October 1243, and that pushed price into the first and second target. As you can see here, there were areas where algos have taken profits, smart money have taken profits. So last week I mentioned a level, and that's the lows to lows, and indeed we saw a participation from that level. And now I'm going to bring you down to one time frame. What you see here on the screen is the daily time frame. As you can see, the market, I gave this level last Wednesday, and we were here. That was the day, I believe, 26th, and the market went 2 more days higher. On Friday, we saw this huge bar higher, and the market got into that level, the 109.90 level, which is the level I gave you last week. After that, when we move to the 240 minutes here, we see that the market has actually reacted to that level. Let me remove all the other noise there. We don't need that at this point, not yet at least. And this is the participation from smart money. So going back to the context of actually selling in this case and forgetting. Would that have been a good strategy? As you can see here, if you only look at the smart money, so the levels that are actually participated by algos, we saw that participation on the downside. Okay. However, so you might think, yes, I could actually sell here, maybe put a stop above 61.8% level, and then just forget about it. The point is that this is a clear example, and you often find example like this where you have to take into account also other participants. Look at what happened here, and just focus for now on the smaller moving average here. This is the 4-hour, 26 and 13. The red is the 13 EMA, and the 26, the blue is the 26 EMA. As you can see here, smart money sold this market, but then dump money on the 4-hour time frame has bought this market. Okay, and market went into the area, and then there was participation. It could have happened that there was no participation or little participation in this area, and the market would have just continued lower. I think this offers, a practical example and very recent example that we cannot simply just fire and forget. And that's also the reason why I never buy or sell at these levels. People who follow me and study, they may know that we always test these levels. We need to identify a sequence of measured move and only enter short when the long sequence on the smaller time frame is violated. Okay, so in that case, it was violated, and it offered even a risk-free trade here. But what happened is that there was no follow-up in this trade, and obviously, the reason was participation at this level, prompted also by selling in the dollar index. Okay, so this is a typical example of case in which fire and forgetting would not work. Now, this week we also had another recommendation, another trade that, on the other hand, worked nicely, basically on the same type of setup, and that was the euro versus the Swiss franc. And you will remember here that, and this is again the 4-hour. Let's look at the daily. The recommendation last week was to actually sell any retrace into the 108.50 level. As you can see, this is not the previous low, right? It's even a previous low here, but most importantly, this is an extension short, and that was identified using the rules that I teach in the FibStalker Methods coaching program. So what has been different in this case? In this case, had you sold the 108.53, which was retested here, as you can see on Tuesday? This was Monday. This was last Friday, Monday, and Tuesday. Tuesday, that level was retested. It was retested on Monday as well, and we saw strength here in response to and following the strength in the euro. But in this case, had you sold the 108.50, which was the level recommended, you can see that in just one day, the market went into the first target of this measured move. Okay, so if you traded this, you would believe that fire and forget actually works, because you could actually sell here, put a stop above, and just wait for the first target to be hit. These are two different situations. Whereas in this specific case, smart and dump money on the daily time frame both agreed. So obviously, this trade particularly had less risk. But yet it does not mean that you can actually simply sell these levels and forget about them. Trading requires a little bit of maintenance, and that depends. I mean, we're working on daily here. If you take the opportunity on the weekly, that maintenance may be needed on the daily time frame, so once a day. However, as a trader, obviously, you have to watch your charts. And I personally do not believe, even in a case like this where the trade actually behaved as anticipated, that you can just let your trade go. Of course, if you use a wide enough stop, you can let this play out, and you accept the risk and the loss. If that happens, you can let this play out. And again, look at what happened here. The 4 hours bull money here eventually gave way, and you could have sold here at this point. However, the market came back, never challenged the highs, actually printed basically the same highs here, and then only then it started to move lower. Okay, so these are only two examples that show that we have to be very, very careful when it comes to fire and forget. And in fact, actually, I personally don't believe that is an option in trading. Forex, which is typically very volatile, but I believe it's not an option also in trading futures or generally stocks with gaps and news. So we have to take a balanced approach. There are cases like for example, at the beginning of the year, if we go back to the US dollar Japanese yen, I've been trading it heavily at the beginning of the year, and we also had the FX Street. In the FX Street show as well, we made a call before the fact, a number of them. And in cases like the 50% retrace, which we called here in February, this was a 50%. So smart money selling this level. Plus, we had the bear dump money here selling. So when it comes to certain signals where both the smart money and the dump money agree, for example, in this was another case, right into that first target, and then he retraced again into the next measured move. So in these cases, when dump and smart money agree, obviously the risk is lower, and you can think of strategies, execution strategies that are similar to the fire and forget. I like always to monitor my trades. Okay, and this concludes this first part, which is a brief discussion on fire and forget in trading, using a euro-dollar, euro-Swiss franc, and US dollar, Japanese yen. Thanks for watching. And if you like this video, you can actually link it on Twitter as well, and I thank you for that. In this section, I want to discuss very briefly the impacts that the US elections 2016 could have next week on the equity markets. And generally, later on, I will also discuss as one of the opportunities the dollar index as well, and we can look at that as well. Now, when it comes to the U.S. election 2016, of course, the first and most important financial instruments to monitor is the S&P 500, and I like to follow the the mini futures here. Excuse me. And I've commented on this chart, on this market for only on FX for over 3 years, and for those who follow me know that we have modeled this market successfully capturing basically the last three bottoms here. And we did that. There's no magic in this. We just did that by following the sequences of measure moves and following basically the smart money. We had a sequence that started back in 2012, and we have a traditional measure move, 50% retrace, from the low in 2011 to the highs in 2000 and the beginning of 2012 here. There was participation at 1149, and I'm doing this analysis because I want to bring you down to what we have at the moment, and I want to show you first what are the possibilities from a technical point of view, and then very briefly discuss. I'm not a fundamental analyst, and I'm not a talking head. I just look at price and the basic behavior of what we could see. And what happened here is that we had in 2012 we also had another 50% retrace here, and then the market started moving in extension, first and second target. So we had highs to model the next measure move. Now, the high that we saw in 2013 is very, very important. It's also the high of the high in 2000s, basically. Okay, so it's very, very important. The high in 2000s was higher than the high in 2007, actually. So when we look at price here, and we look at a larger period of time, we can see how this high is very, very important. In fact, corresponds to the high that we saw in 2000. Very, very important. Why? Because these levels actually are widely watched by smart money and classes of algorithms, particularly the classes that we model here. And then, as you can see, this price actually continued moving in extension. So, we kept using our rules. And if you want to learn all the rules, my coaching program is the best way to do that. And we captured before the fact. I have the videos on FX Street and my review capturing this low, the 1767. The level was slightly different for the way this continuous contract is composed together, but we were able to capture and trade that. It went into the first target, and we applied the same rules, and we were able to identify the lows in 2015 coinciding with the lows at the beginning of 2016. So this is all done before the fact. In fact, several weeks before this high was actually printed. And this is very important to us because it gives us not only an opportunity to add to our long-term longs as well as trades in these areas as we did, but it allows also to project and understand what's going on. Now, the market has traded the 1832, and there was strong participation on top of this market. This is not going to be reversed immediately here or in a sudden drop. This market has targets above, and has targets above 2200 here. That's the first target, and the second target is around 2400, which is the intermediate targets for this market. So I see no way yet, or for this market to actually drop. Within this measure move that was participated around 1832, which is this level here, there's also another measure move, an extension that got participation 1885 and actually hit the first target here. So all this, I see it as profit taking in a moment in which the markets are uncertain. I will get into that later on. And in the past weeks and months, you will remember that, and if you don't remember, you can watch the videos I have presented the 2020 level, and the reason why it's there It's because it's the next measured move of all these move higher here. Okay, so this market is still in long measured move, despite the fact you're seeing a correction here, and this can become even more dramatic here as we get into the vote next week. However, see, let me give you a little bit of perspective. I won't start talking of the possibility of entertaining a bear market until this market actually loses this area of participation. When smart money says, I'm not going to participate, if this market comes back 17% correction from highs into the 1830, and then we lose this area, then we can start thinking about a bear market. So we have to be very, very careful when, there are a lot of opinions around talking heads and people who believe they understand or they know what the market is going to do. The reality is that we don't know what the market is going to do. So we have to be very, very careful in this. And again, I'm not going to trust blindly the 2020, but this level is the one that at the moment has the highest probability of being participated by smart money. Now, if you add dump money as well, it gives us basically a similar picture, as you can see. These lines you see here are the monthly dump money area, and every time we saw in the past, not only in the past few years, but in the past decades, we have seen this market getting into this area, and while these two moving averages are moving higher, we always have seen participation. Look at this, below the area, into the area, into the area, also close to about the start of bear market, but still we saw that continued participation higher. And again, here in this area, 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 even before the start of the market, which suggests that we should be very, very we should not be alarmed here. Even if this market moves lower, we're going to get some sort of bounce also, because the SP 500 actually retraces quite a lot. It's a mean reversal market, and this is very, very well-known behavior. So now this market is suggesting something new this week, and that started basically at the beginning of the week. You remember the last few sessions I mentioned, and that's a typical behavior of price of all instruments. When price loses a bull or bear dump money area, in this case this was a bull money area which supported price here and here and here, but once that's lost, the market very briskly, and you can review last Wednesdays as well, very briskly moves into the next area on the larger time frame of dump money. And that's exactly what we are seeing here at the moment, okay? So I anticipate a continuation lower here for this market, probably into this 2054, and then we're going to see some sort of bounce, and I believe we're going to get another a move lower. Now, what I believe, it's not really important, because in the end, I don't know what is going to happen to this market. What I anticipate, and I can only say anticipate, is that this market is going to eventually correct very strongly into 2022. And the strength of this is going to be driven by the level of uncertainty in the market. The more the market are uncertain, and the fastest are the move, and more nervousness is in the market, and people tend to sell more easily. So let's look at the current election. Clinton represents basically the establishment, a continuation of the current policies, which in my honest and humble opinion have not been great for US. You see a very, very slow a very, very slow economy, despite all the money that has been pushed in the system. Trump, on the other hand, represents change, but market do not like change. Whatever is the candidate president you support, When it comes to the markets like certainty. So certainty, if Trump wins, will only come into the market after a few weeks, probably, when it will be very clear, which kind of attitude, more than the policies, and tone Trump might bring in if he's going to become president. So when we look at the charts, we clearly see a start of an area of potential bounce here below 2055. So this could be a first place where we get a bounce. And notice that this area coincides with the first target of this measure move started at 2142. So market is behaving according to smart money pushing this price lower, as well as dump money basically not able to support this price any longer. So this market, independently from the results of the election, is going to move very briskly lower into 2054 and even lower. Now, my take is that it's going to stop in this area. If it does not stop in this area and challenges the lows here, which would be very, very improbable compared to previous history, unless this turns out being a 1987 kind of crash, which, to be honest with you, I don't see the indications. But again, anything can happen in the market. We have very clear levels here in our mind. So to me, very probably this area is going to offer the next low and opportunity to buy into this market. And that's my take, depending on whether or not Trump wins the election. Now, remember, there is still, and that's the last comment I'll do on this, there's still this 1832 level, which is our area of last resort in a way. This has acted as a support before. The first target was never hit. Participation came into this area twice in August and September 2015, beginning of the year, twice again. And in the case, I don't believe it's going to happen, but in the case this market gets back into this area, it is possible that smart money will keep supporting this price. And this would be a great entry opportunity, because long term, I totally support the view and idea of a couple of very long-term and long experienced leaders in Canada. One is Ron Maisel, founder of the Canadian Society of Tech Analysts, of which I am a member and director, and also Leon Touet, 55 years in the market. They both share the idea that we're only seeing the start of this bull market. And I think 2009 is much more similar to 1987 than actually any other period in the market. That said, I don't know what the market is going to offer us, but we have areas, and I gave you the areas of reference, so you can actually use this for your own decision making and trading as well. Okay, if there are any questions, I will answer them, and I will answer them in the next section. And this concludes this section where we review the technicals before the US elections, and we looked at what the SP 500 can actually do. Thanks for watching. And if you like these videos, please link and put a link on LinkedIn, and please link this video. All right, so now I want to review the past opportunities that I have mentioned last week and see how this market has fared, and whether there was an actual opportunity to trade, and whether the market has continued or reversed. So let's start from the US dollar Japanese yen. Okay, and I will switch to the chart, and we look at US dollar Japanese yen. I mentioned last week that we had a clear sequence of measure move in this market, and this market has played to the pip. Okay, so And for those who follow me know that some of the models I use several models. In fact, I use 6 models. I only typically show 2 of them. But in this specific case, the model that we used, the simple models work very, very well. And this market is a very technical market, so that happens very often. We had a 50% participation around this 101.70 here, and then the market went into the first target, 102.24, and then 102.90. And we call these levels as well. Then market has just continued higher, and look at the beauty of this. It tested the first and second target, and the second target was 105.61. The high was 52. So in reality, the second target is not to be considered tested, but and this opens up a couple of considerations here. First of all, anyway, as I mentioned, this market would need to trade the next measure move. Now, the next measure move would be the highs to highs, and that has failed. So that's not what this market is. What this market is actually trading at the moment. And this market, I believe, will not stop here. I believe that this market is eventually going to retrace all the way halfway back here. Okay, so while this was not a short, because this market is still in a sequence long, so when it's still in a sequence long, we have to be very, very careful, because the next extension can pick up price, and you find yourself in a short position that actually lasts very, very little here. This market continued lower, and I believe is going to need to test 102.82 in order to see whether there is going to be another participation. The trend following model here, it's showing support on top of this weekly 13 EMA, but this is not a strong signal. So I want to see participation from algos and smart money, and if that happens, this market might still be in a situation where dump money will step in and will propel price higher, and that target in this case would be 106.82. So that's the opportunity. The market actually went close. Depending on how we trace this, we could consider that second target hit. Next, now this market is below 102.18. This market is going to retest the weekly longs here, the monthly longs at 170, which have been tested a number of times. If this holds, it's going to be a brand new opportunity to bring price from 102.80 into 106.80, which is 400 pips. That's a good opportunity, and that's something that I want you to consider. Mind that the resistance here, if this continues higher, the resistance is going to be around 109.34. That's the area that I'm going to consider. Okay, so there is a good opportunity here. That depends also on what the dollar index is going to do. Next, I mentioned the euro pound. The euro pound last week, I mentioned the potential for a correction that didn't happen. It doesn't mean it cannot happen, will not happen. It just didn't happen yet. When we look at the sequence of measured move here, this market is actually trading in extensions here, or at least finding support on extensions. I want a stronger signal, especially in a market which is very, very extended here. Of course, this extension could actually bring price higher, well above into the targets, which are well above current levels here at 192.44 and 94.06. If that's the case, I'm not going to risk, and I'll let this market move higher. Here is more the weakness of the pound that is pushing this price higher, rather than the strength of the euro. Obviously, in the last few days, we saw a lot of strength in the euro, but that has not been reflected in this market. So also because we saw relative strength in the pound as well. Now, I won't be happy with this kind of setup here, and so I'm still waiting. And that setup that I gave you is still valid. a retest of 86.26 within this area of dump money area long would be a great opportunity for a continuation higher in this market. That would imply that the euro continues and the pound resumes its weakness, which is not the case. The current scenario, the future scenario, the future weeks could actually be behind a correction of this market. Okay, so we still have this opportunity working. Euro dollar, as I explained before, this market has actually initially reacted to the level that we gave, 109.80, and that's good enough because he gave a risk-free trade. And this market could have continued lower, just he didn't do it because of the weakness that we saw in the dollar index. Now, this market is at another very important juncture here, but I won't get with this strength, I won't get on the bandwagon here. We need to see what happens, and actually, obviously, this market is trading dollar index weakness rather than euro strength, dollar index weakness specifically also before the election here. So although this is a valid level where algos would step in normally, I'll be very, very cautious, especially going towards the election here. And as you can see, for our dump money, it would be very, very strong and interested in buy this market if this market would correct. And eventually this market will correct. In fact, I can even give a level here where this market is going to correct. And in that area, there's going to be interest from bull dump money here, which is potentially going to propel this price higher. And later on, when we review the opportunity, the dollar index, we will understand a little bit better why, because there is a potential for the dollar index to continue lower. And finally, I want to review the euro versus Swiss franc, which is a trade that worked fine. I gave two targets, and the first target was hit on Tuesday, just in one day. So the trade is still on, and let's again try to rebuild the reason for this trade. This trade was below the monthly dump money area here, which pushed this price, actually rejected this price and then started pushing this price lower. And we took two trades in this market. We took a trade a couple of weeks ago, and we traded to the previous lows, and that's exactly what happened. And then the market came back, and it went to trade into both an area of dump money short as well as smart money short. So that was a good bet. The market did not just move lower right away, but it actually rallied on Monday and then on Tuesday continued lower. But participation from both this group actually was capable of pushing this price lower. So it's very important to see when these two groups are aligned. Now, what can happen next? If this market retraces a 50% into, again, so a 4-hour 50% here, into an area, and it does it slowly so that it can meet also the interest of bear money here. That could be, and there probably will be a continuation into what? Into the 50% level that was already tested back in June here. So that's the only level where smart money could start coming in to test interest, and we can test interest of smart money around this level. Okay, so this congrats, this trade brought a target here, and is still valid for a second target. Of course, you could have taken partial profits here and then just continue trading this market on the downside. Okay, and this concludes the review of the opportunity of last week. Thanks for watching, Greg. Great trade. Thanks, Greg. Greg, I hope you took it as well. And I took my profit yesterday night, and it's pretty good actually. So next section, I'm going to review, and again, if you find this interesting, please, you can link it on YouTube. So Greg is saying, yes, I took it. That's great. If you're interested in the FibStalker Methods Coaching Program, you can always look at my new website here. Still working on it, but it's shaping up quite nicely. And you can go on Premium Products, FibStalker Methods Coaching Program here, and fill that information. I can send you additional information on the content. All right, so we'll review the euro pairs very quickly. So in this section, I'm going to review some of the euro pairs. I'll start from the euro dollar. As I mentioned, this market is at a 50%. This market could actually trade higher as well. This market is currently continuing its sequence of measured move, lateral sequence of measured move here, and it could go as high as going to test to 112.35. That's really related to what the dollar index is doing. For now, anyway, I would be very, very cautious. The dump money here start having interest. If this market goes lower, we could see another test of 111. And once the situation is clear, if the dollar index will regain strength, this is going to become a short again at these levels or at 12.35. Pound, euro pound, you already touched on this, Max. I'm going to be very, very quick. This was an extension, long continuation high, but was also participation from dump money, as you can see here. This dump money here can be lost at any time. And if this market loses the dump money area here, we're going to see a move lower into 0.87, which is going to help price into that level that we will be watching. Okay, and FX Ambassador, good evening, and by the way, good evening to Greg, JS, FX Ambassador, Nicholas Costa. I will review the pound later on in the next section. So next, Euro Swiss franc, we talk extensively about it. I'm not going to touch on it. You can review the previous section when we review the opportunity of last week and next week. So Euro Australian dollar, this is a very interesting market. We have to keep an eye on it because this market has not done it yet. Although this market has been very iffy and has not touched the 50% in the past, and Greg and others can remember that. I believe that this 140, 70, 75 is not traded yet. So the level I'm going to watch is the 146.11. In fact, this is going to be one of the recommendations for this and next week as well. There is interest from dump bear money there, and we could see this market trade this level, and if not retesting the 140.70, at least retest previous lows here. Okay, so that's something to keep in mind. Euro Canadian dollar, very, very strong market, and we mentioned the reason in the past weeks, because this market has actually moved laterally on top of a bull monthly area here, and it's really going now for the 50% retrace. When we look at the daily, there was really a market moving in extension, very little structure here. And that's what we're seeing at the moment as well. If I have to look at the retrace here on the 50 on the daily time frame, the only thing I would look at, and this is very bad for the Canadian dollar actually, we will need to study this. These are all extensions on the 4-hour time frame. Okay, so this market, I don't see it retracing a lot here. And let's give a quick look on the 4-hour time frame. Dump money supporting this price, of course, and we can see extensions at play here. would do a full analysis for my students, obviously. But a level for sure that you want to keep in mind is the extension from these highs to new highs. And as you can see here, this extension on the 4-hour has traded already. So if this holds and gets the help from bull money, bull down money here, the 148.30 should hold on this time frame and actually propel this market a little bit higher into 149.45 and 150. Okay. Next, euro versus New Zealand dollar here, and this market it has showed a 50%, which I've not shown, I believe, on the free show here, but I showed it in the review I do for my students. As you can see here, we saw this market stopping at that 50%, aided by the weekly dump money, the start of the weekly dump money here. And then, of course, the daily dump money was also positioned already on the short side. So what we are looking for in this market is actually a continuation lower into the first target of this measured move here. Notice, though, that this market is still on top of that long-term first target. And you will see that algorithms will keep taking profits at these levels again, as we can see here, and here, and here, again here, and possibly here. So you want to take partial profit in this market if you're shorting and trying to bring the remaining the 149.50 level. And finally, for this section, the euro versus Japanese yen, and this market here, when we look at the weekly, it's really moving laterally here, and we know that this sequence, one sequence that we considered here is this sequence here, which is still in play, but this market is actually battling with this area. So I don't see a strong case for a short continuing what smart money has started here, and it's possible for this market to to rally. For this market to rally, we will need to see strength in the euro and weakness in the Japanese yen at the moment. Obviously, the opposite's happening, right? So money is coming out from the dollar index and from dollar, and getting into the other pairs, euro dollar, New Zealand dollar, US dollar, which offered a surprise here, and that's money coming up from the dollar and getting into these other strong pairs. Okay, and this concludes this review of the euro related forex pairs. And if you like what you see, you can always publish a link on your Twitter account. Thanks for watching. Okay, next we're going to review the pound pairs, and I think FX Ambassador would be happy there. And again, if you like what you see here, you can link this video section. So I'll start from the pound versus US dollar. You won't find a lot of information here. These markets are actually grinding higher, taking profits around area of previous profit taking here, and trying to grind up into the next area short. Before we can say that this market has reversed, there is a lot of work for this price to do. What I believe is that it's very possible for this market now to grind higher into the 124 and potentially even above, into the 127.67. Now, in order to do that in an orderly fashion, we need setup, and I don't have setup at the moment in this market. So what I want to see a decisive move higher, and then I want to see an extension long trading into 127. That would be my case here. So for this market, there's very little at this juncture that we can say. What we can say is that the 4 hours start supporting this price, and if you time on the smaller time frame, you can start looking at these measured moves. There's an extension here. Price getting to the first target and didn't get actually into the second target. So let's see whether this market is going to continue higher or it has traded 50%. So short term, if you're long this market, excuse me, you should stay long above 122.79. Indeed, if this level is retested, this could be an opportunity for a continuation higher. Now, there's a lot of risk, systemic risk in the market at the moment because of the US election, which anyway are important. But this area here, just below is 127.80. It's a strong support area from the way I see it. So you could actually see this market, retesting this level, and if that happens, you could take a step there long into 123.90 and 124.50. That's what I see in this market. Pound versus Japanese yen. Same story here, although this market has shown a little bit of weakness when it traded into that short money, dump money area. But I believe that's only an opportunity for this price to work out a little bit this area of participation short. Now, we have nothing to show against this, but this level here, which is the 126.90, where on this 4-hour time frame, algos are showing some interest in buying. And that's the first time. The previous time was actually, it's not the first time; it's the second time. But this market clearly came back to trade 50% again because the next measure move has failed here, and this broke price has failed, and this broke price into the trend continuation area here that you see here. Okay, so that's the reason why this is trading. This is real. There is interest there, which has been proven a number of times. Unfortunately, there is also bear interest above this price. So as you can see here, this is not really an interesting trade from this point of view. It's not that it's not interesting; it's risky, and there's no reason why we should take on additional risk in this business. Pound versus Australian dollar. Same story, all this market. The reason why this market looks more encouraging here is that it's also going to break out very soon here within an area that is probably has been worked out. So if that's the case, we're going to see a very quick move from 160.59 to 162 here. It's 200 pips. And don't expect, a strong continuation right away. That could happen, like in this case. But something like this, a throwback, could also happen. See, so in a market that is trading short, I want to take shorts. I want to take longs because longs are against the current trend. And yes, this could be the start of a reversal, but that reversal is a process, not going to happen right away. And fine, I mean, if this market rallies 800 pips, be it, I won't participate in it, but I'll definitely participate in taking something as the market retraces, and then participate to the next extension higher. So it's a lot of work to be done here on the weekly time frame for this market. So there's no need to rush. And these counter trend trades can be profitable, but they're risky as well. And as we have a lot of choice in the markets, I'm not looking for adding additional risk. The pound, New Zealand dollar, this market is actually exploring lower lows here. And I've not been trading this market recently, but we had modeled it like a 50% retrace, which hit first target and went very close to that second target. You will remember that second target has not been hit yet. So that's really where algos are driving this market here. Now that said, this market is also around that first target. So When that is the case, you can always find some sort of reaction. Also considering that all the other pairs, pound, are kind of recovering. The exceptional strength of the New Zealand dollar is actually pushing this price lower here, but it's, to me, it doesn't offer it doesn't offer an edge at the moment. Pound versus Canadian dollar, it's more interesting here. And again, we are in one of those situations where the dump money short daily has been cleared out. So this market could quickly move into 168 from 164.80. So talking about 300 pips, 320 pips here. So this could happen very, very quickly, and is supported by 50% retrace, as you can see here on the daily time frame. That first target has been hit, and this market could actually continue to the second target and then enter extensions to see where this market can go. Mind that the 168 area here, it's an area of where dump money interest short will start, and we will see some sort of despite this strength that we're seeing here, we'll see some sort of throwback, and that could be an opportunity to get long this market. And finally, I'm going to review here the pound versus Singapore dollar here. I don't have a lot of price data, but you can see the same pattern happening again and again, and a breakout on the upside, although I don't really break out, as you know, could actually bring this price into 174.27. All right, so I think I covered all the most important pairs here, and this is it for this section. So thanks for watching. Now it's 8 p.m., so I will actually conclude the show here. I gave you a lot of trading ideas in the different section of this show. So next week we're going to go through them, and we will also have attend the results of the election. So good luck for the elections. I hope your candidate wins, and we will see what happens next week. Okay, and you all have a good evening, day, or morning. Bye-bye now.